Hey, Seth David here from the world famous Nerd Enterprises Incorporated, and welcome to Nerd's Guide to the Galaxy. This time I'm taking you through a guide to give you front row seats in the ring to witness a really important match. It's going to be QuickBooks Online classes versus locations. We're going to see who's going to win. Now, what does that mean, really? Which one should you use? Should you use classes? Should you use locations? Maybe you should use both. I'm going to explore every angle of this, balance sheet and P&L, classes and locations. I'm going to show you everything from how to set them up to how to use them and how to record all kinds of tricky transactions that you're going to want to learn how to use these for if you are, in fact, using them. Let's take a look at my screen, and I'll show you exactly what I'm talking about. Now, the first thing you're going to need to know is where to go to set them up. So we're going to click the gear icon, and we're going to go to Account and Settings. Okay, and then we want to go to Advanced. Okay, and here under Categories, you'll see Track Classes and Track Locations. Now, yours will not be on by default. So if you haven't already turned these on, they will not be on. When you do turn them on, you're going to notice these extra options, right? So first, warn me when a transaction isn't assigned to class. Definitely a good idea. Generally speaking, once we're using classes, we want to make sure we assign everything to a class so we don't leave something out. And then the next choice is whether we want one to an entire transaction or one to each row in a transaction. You're almost always going to want one to each row in a transaction for classes, because while classes gives you the choice, locations does not. Locations are always one to the whole transaction, and you're going to see as we go through the rest of this video where that really impacts which one works well in the balance sheet versus the profit and loss and so on and so forth. Now, under locations, you also have labels, right? It would be great if you could do custom labels, but you can't. I'm guessing it's not as easy as it might sound like, right? I don't write code, so I don't know. But the bottom line is you can choose from any of these, and this starts giving you a sense of how these are used typically in QuickBooks Online companies. So we have business, department, division, location, property, which is what I'm going to use. So throughout the rest of this video, when you hear me use the term property or location, it's the same exact thing. Okay, and then there's store or territory. Okay, so once we're done with this, we save, and you always have to click done here at the bottom right. Now let me show you where to go to find those lists. Okay, again, we'll go to the gear icon, and we're going to go to All Lists. And over here, you'll see it's named the menu option Properties because that's the label I chose to use for locations. And up here are your classes. And we're going to be going through a series of transactions based on a scenario where I have 3 different properties that I'm keeping track of in one QuickBooks Online company. And I'll show you how to get this all set up for transactions that mainly impact the balance sheet and then a transaction that hits the P&L. So let's look at classes, right? So these are simple. You click New. You can name the class. You can choose if it's a subclass. That's about all you get with classes. So I've got my 3 properties, 1600 Amphitheater Way, 2416 West Victory Boulevard, and 2632 Marine Way. Okay. Let's go over to All Lists again. And now let's look at Properties. And Properties, to set up a new one, you're going to click New, but notice you have some more dialogue here to work with. Right? So first of all, you can have sub-properties. Second of all, with properties, because they're meant to be used for different divisions or stores or locations or territories, those sorts of things, you can actually set them up as like a separate entity within your QBO company. So each location or property in this case can have its own title for sales forms, its own physical address, its own email address, phone number, and so on. Any of these options, you just click it, and you put in the appropriate information in the dialog box that appears, right? So you can see all the different things that you can differentiate when it comes to locations or properties in this case, right? So that's pretty powerful and interesting. I've already set up the 3 properties that we need. So notice I'm using both. I'm using both classes and properties. We're going to record a bunch of transactions, and I'm going to assign the transactions to each of the class or property that we need to, so that you can see how they work in the reports that we're going to run. Okay, so once we've got these all set up and you've added in everything that you need, you're going to notice a difference in your form. So let's take a quick look at the invoice. Okay, here's your property, right? And notice it's just one up here in the header of the invoice. So it's the only property you get for the whole transaction. Whereas your class, because we chose one to each line in a transaction, now that shows up in the detail section here, so I can split transactions up by class when I need to, right? So that's what it looks like on an invoice form. A sales receipt's going to look exactly the same. If I go over to an expense now, you'll see it's same concept. I have one property for the whole expense transaction, but I can split it by class when I need to, and we're going to see an example of that coming up a little bit later on. Okay, so that's what it looks like on the forms. Any form for any transaction that you record in QuickBooks Online will now have that, essentially that setup, where you will be able to assign one property to the transaction and as many classes as you need, if you needed to split it up. Okay, so that is your setup for both classes and properties. Now let's record some transactions. Okay, so let's say that I want to loan $100,000 from 2416 West Victory Boulevard to 2632 Marine Way. All right, let's go to the balance sheet first of all. Always like to start with that. Okay, and if I total this by properties, you'll see that I've started us off with $250K in the bank account. Notice the bank account is Wells Fargo for an account number ending in 5678. And notice I've put the property address in the title of the bank account, so it's very clear this is the bank account for this property, 2416 West Victory. Now, for this first part, we're going to assume that we're only using one bank account for everything, which is a bad idea, but it happens enough that I want you to at least see how to deal with it. Okay? So for this part, we're going to ignore the fact that I've essentially set up this account for that particular property. And now we want to loan $100,000 from 2416 West Victory over to 2632 Marine Way, right? Well, if we're assuming it's all in one bank account, then I can't record an expense, right? Because there's no other account to transfer things to. There's no account to take money out of, no account to put money in it, because it's all still sitting there, which means, of course, we're going to have to do this with a journal entry. And the tricky part is that when we do that journal entry, not only are we going to have to split up, carve out the 100K out of the bank balance, but we also want to show the due to froms between the two different properties, right? So, and you're going to see the way this needs to be set up, because we're tracking two different properties in the same set of books, it's not going to be the way it would normally be if we just had a loan between two separate companies, right? We actually need a separate due to from account for each combination of each two properties that might loan money back and forth to one another. So in this case, even though it's just a straight loan from 2416 West Victory to 2632 Marine Way, I need two separate due to froms. One, we're going to show the money that 2416 loaned to 2632, and another one where we're going to show the money that was loaned to 2632 by 2416. Probably doesn't make any sense now. Bear with me. We're going to book the journal entry, and it's going to make a lot more sense in just a minute. So I go new, journal entry, and let's say this happened on January 14th. Okay, and I'm going to use the Wells Fargo account twice. It's basically like taking money out of the account and putting it right back in, since it's all one account. But this is what we have to do to get it done on the property side, right? So 100,000, 100,000, okay. And for the property, this is going to be 2632 Marine Way. And this is going to be 2416 West Victory. Essentially, we're taking money out of 2416 West Victory and putting it into 2632 Marine Way. But we also now have to show the fact that one property owes money to the other. So I'm going to add my due to froms. And here's the trick to this. The way I name these is very specific, and it's very important to understand this next part. So as I mentioned, in this case, we need two separate due to froms between the same two properties. And notice, in each case, they're in a different order. So this one starts with 2416 West Victory. This one starts with 2632 Marine Way. And that's important. We're going to use that. So first, let me fill in one of each. Okay, and what this does is this tells you, the first property that appears in the name tells you which property goes here. Okay. So it autofilled it from above as I was entering that. So this one happens to be right, but never assume anything, right? and this one has to be 2632. So whichever property appears first in the due to from name is the property we're assigning. While we're at it, let's just do the classes. And obviously you're noticing that in a journal entry, I can split up things by property. 2632. Okay, and now we need our amounts here. So this is going to be 100K, and this is going to be 100K. Okay, so basically we're saying we want to create kind of like a, well, we're going to add money here. On the bank account side, we're going to add money to 2632 Marine Way. We're going to take that money out of 2416 because that's who's lending the money effectively. Okay, and then over here we're creating an asset for 2416 saying, hey, I'm owed this money. And here we're creating, you're going to see it's really a negative asset, which is the same thing as a liability. But I'll explain when we look at the balance sheet why that's important, that we classify it as, we classify all of them as assets, right? So I'm creating a liability for 2632. And again, the asset is for 2416. Let's hit save and close and take a look at our refreshed balance sheet. Totaled by property. Okay, so this is gorgeous because now instead of having 250,000 here into 2416 West Victory, we have the remaining 150, and we split it up. Here's the 100. Over here we have the total, of course, that's in Wells Fargo, which is 250K. And over here, you can see why it's important to split up these due to froms. If I just used one due to from account for anything that went between these two properties, this would zero out. And it wouldn't be clear on the balance sheet who owes who what. So that's why it's so important to create separate due to froms for each group of properties for each property, you know, in terms of who would loan money to one another. Okay, but you can see here very clearly this negative 100,000 is a liability. This positive 100,000 is an asset under the appropriate properties. Everything looks beautiful and crystal clear. I'll widen up my column here so you can see a little bit more of these titles, right? And everything else is fine. It's the same. The initial 250 contribution was made by 2416 West Victory, so that doesn't change here, right? So that's how we do it when there's only one bank account. Now I'm going to delete that journal entry, and we're going to do it the way I would hope you'd all do it, which is where you keep it really clean and you have a separate bank account for each property that's involved. Okay, so let's just click into these numbers. I'll get into my journal entry and delete and yes. Okay, so we're back to square one, 250K in Wells Fargo, all under 2416 West Victory, right? Now let's do it based on two different bank accounts. So in the chart of accounts, you'll see I have Acme Bank, which is the bank account for 2632 Marine Way, and I have Wells Fargo. Now, in a lot of cases, you'll have probably the different bank accounts for the different properties at the same bank, which means it'll be tempting to want to just record a transfer, because that's probably what's going to happen in the real world is you just transferred 100K from one property's account to the other. But you can't record it that way in QuickBooks in a case like this. You have to actually treat it as though these were two separate companies and two separate QuickBooks Online companies, which means we're going to have to record a payment out of Wells Fargo and book that to its due to from, and record a deposit into Acme Bank and book that to its due to from. So let's go ahead and see exactly what this looks like. So I'll use the expense transaction type. And here's where you really have to pay attention, right? You make the slightest mistake going too fast and you miss a detail and you don't catch it until like a month from now, it's going to be a mess to try and figure out what you're doing and how to clean it up. Okay, so 2416 West Victory, Wells Fargo bank account. The property, remember, we can only do one, so that's going to go up here to 2416 West Victory, and that's actually fine in this case. This is the due to from for 2416 West Victory against 2632, and it's 100K. Okay, and then the class will do 2416. Right, so this is pretty simple, pretty straightforward. This will take care of the money out part of the transaction. And I'll hit save and new. Actually, not save and new, because now I want to record a deposit. So I'll record a deposit. And we want to make sure this is going into Acme Bank now. That's who's getting the money. Okay. Over here is where you're going to list the property in a deposit. So the property here is going to be 2632 Marine Way because that's who's getting this money. The date should be the same, of course. And here we're going to use the due to from for 2632 Marine Way between them and 2416 West Victory. The amount is 100K. And the class is going to be, again, 2632. Save and close. And let's check our balance sheet. Okay, let's total it by property and run it. And now it looks super clean, right? I have 150K that's actually in Wells Fargo under 2416 West Victory, 100K that's actually in Acme Bank for 2632 Marine Way, and I've got my due to froms exactly the way I need them, right? And again, you saw I deleted the journal entries, so these are coming from these the payment that we wrote and the deposit that we recorded, right? So this lines up beautifully. Just for the doubters out there, you can see this is the expense. It's no longer the journal entry. I don't want anybody to think I'm trying to trick them. Okay, so that works perfectly, and it's much, much cleaner than having to do it through one account. The difference, again, is with one account, you have to do a lot of journal entries. Here, you just record the transactions, but remember to split them up into their separate sides, right? So you have one transaction out of the bank account to one due to from, another transaction into a bank account to the other due to from, and it works beautifully and crystal clear on the balance sheet, right? So once that's clear, and if you need to, pause the video, go into your own QuickBooks Online company and sort of practice this. Get caught up with me. It's worth, especially if you're an accounting or bookkeeping professional who's trying to learn this stuff, it's worth paying the money for like a dummy QuickBooks Online company. You can get it at your wholesale pricing through your QBOA account and just play with these kinds of things so you understand how everything works. It's so important, especially when you get into these kind of transactions, which can be very tricky, to really understand the flow and how to get the balance sheet to look exactly right so that somebody who's reading the financial statements can really understand, or it's easy to explain to them, here's what's going on, right? So what do we want to look at next? First of all, I assign the classes in these transactions. So let's take a look at what this looks like when I change the display columns by drop down to classes. It's almost as good, except that it doesn't handle the bank account part of the transactions at all, right? Notice, and you saw we assigned the classes on all the transactions, but they show up not specified on the balance sheet. Couldn't tell you why. I could drill in if you wanted to and confirm. I'm not going to because I don't want to make this video too long, right? But that's what happens when you run the balance sheet by class, even though everything was assigned perfectly. The other thing you'll find gets messy is the equity section, but we're not going to cover that in this video. That's even more complicated, right? So classes don't work that great on the balance sheet. I mean, the due to froms work perfectly, but not so much in the bank accounts, okay? Let's look at something else now, okay? We're going to go to the profit and loss, right? And we're going to record an expense first. So first of all, let's run the profit and loss. You can see there's not much going on there yet. I'll run it for all dates, right? Nothing here. Now let's say we have a utility bill from Burbank Water and Power, and we want to split this bill up between the three properties. We get one bill for whatever reason. They're all tied to the same parcel of land and they all get the same bill. Whatever the case is, I've seen this kind of thing come up. So we're going to pay it out of 2416 West Victory's funds, right? Let's say this was back on January 1st, okay? The property, again, we only get one, 2416. So this should line up with the account that we're using to make the payment for the thing, right? That way that part will be somewhat correct. But as you're going to see in a second, we can't split it by property. Right, so you're going to see where this is where the classes sort of shine and the locations or the properties don't. Right, so they're all going to be utilities. Right, so let's get 3 line items for utilities. Okay, and we're going to split this up 450, 600, and 450. Okay, and the class, the first one we're going to do 1600 amphitheater. Then we're going to do 2416 and 2632. All right, so we got everything. This would be Burbank Water and Power, right? And everything looks good here. Okay, and of course we'd probably want to put the utility bill account number there, whatever. You get the idea. Save and close. Okay, we got our profit and loss. Let's total this one by classes, run it, and it works perfectly, right? I've got it all split up exactly the way I want it, right? Let's switch this over to properties now. Properties, not so much. Remember, we only were able to assign one property to that transaction, so the whole 1500 sits under 2416 West Victory by property. So we can fix that with a journal entry, right? Because remember that I said earlier, you can split up a transaction by property on a journal entry. Because a journal entry is all detail lines, basically, and they give you the drop down. So bottom line, one day, a long time ago, I discovered I could do this. So let's record a journal entry to divide that up appropriately between the properties, right? So again, we're going to need 3 utilities lines. All right. And now what we want to do is we're going to credit this one 900. Okay, and debit each of the other two 450. 450, and the property on this one is 2416. Okay, then 1600 and 2632. Essentially, I'm taking 900 out of 2416 West Victory because that's the portion that needs to get split between the other two properties, 1600 Amphitheater and 2632. So I'm crediting, which reduces an expense account, the utilities account for 2416, debiting the utilities expense. So I'm pulling the money out, putting it right back in, but splitting it up between the two properties. We don't need to do classes here because we've already got it done by class from the original transaction we recorded. So here you would not want to do this. It probably wouldn't make a difference anyway, but there's just no need to. And I'll click Save and Close, and yes. Okay, and now let's look at this by property. And now it works beautifully by properties. So we can get the P&L done by property, but it takes a lot of extra work because we have to, for every transaction that you ever have split between 2 or more properties, you'll have to record a journal entry to get it done by property on the profit and loss. That's the bottom line. So depending on what kind of situation you have, if there's a lot of transactions like this, this can be a lot of work to have to maintain this the way you need to, right? But it can work on this. So we've got that journal entry done. Now let's take a look back on the balance sheet and see what's going on over there, right? Let's go to reports. And the balance sheet. And let's total this by property now. Okay. And you can see now that the Wells Fargo account has $1,500 less. Remember, it had $150K in it before, but now it's only got $148.5, right? And that's because we've effectively loaned $450 to 1600 Amphitheater and to 2632 Marine Way. So we need this to increase to $100,900, right? We need 450 coming out of Amphitheater, 1600 Amphitheater, and another 450 here on 2632. Between them and 2416. So this we're going to have to do with the journal entry, of course, right? So that's what we'll fix. Let's go to New, and let's record a journal entry. And of course, we want this to be the same day as the utility bill, so January 1st. Now here, we just need a bunch of due to froms, so we can fix that. So I got due to from 2416. And 2632, then due to from 2632 and 2416. Then we need another account to go between 2416 and 1600, right? So this is 2416 and 1600. Okay, and then this is going to be between 1600 and 2416. So you can see it gets messy because we have to have all these separate due to from accounts for these kind of situations, right? Let's put 450 in here, 450 there, 450 here, 450 there. Okay, this is gonna, we're basically debiting 2416. This goes to 2416. Right, because we're increasing what's owed to 2416, so we're debiting this as an asset, right? And for the class, we'll also do 2416. Okay, this is what makes it nice. When you're as organized as I've been about how you name the due to froms, it makes this part much easier, because now I know I just pull up 2632, 2632. Okay, this again is going to be 2416, 2416. And finally, this is going to be 1600 amphitheater. So it's always the first property in the name of the due to from that you want to assign it to for property or class. Just makes it much easier that way. Our entries are balanced. Let's hit save and close and see how gorgeous our balance sheet looks. All right, and the balance sheet's going to refresh. There it goes. And let's go by property one more time and run. And look how beautiful that looks, right? Here's the 450 between these two properties, okay? Okay, here's the 100 450 and that 100 450, right? So again, it's split up beautifully here, and it makes it really easy when you do it this way. Let me widen this up so you can see the accounts. Okay, when you do it this way, this is between 2416 and marine, right? So those match. This is between 2416 and 1600. So these match. So it's just really, really clear and easy to see. And of course, you can look at the totals, and the numbers tell the story too. Amphitheater Way has a liability. You can see that that matches up with 2416's asset, and 2632 has a liability, and it lines up with that asset. Everything looks beautifully. Notice also that the net income closing line in the equity section, this is where the P&L closes out to the balance sheet, the balance, right? Notice we've got the net income closing in from that utility bill in the exact right split. So that works perfectly too here by property, because we did that entry to divide things up by property on the expense side. Over here, let's switch to classes. Let's see how this looks, right? So again, still looks ugly on the bank account side. This part looks perfect, right? The classes worked. So this part looks exactly the same, and this part works well because we know it would, because the classes work beautifully on the P&L, and that's where this is coming from here, right? So that's pretty much it, folks. I mean, that's the deal as far as understanding the sort of benefits and the downsides of using properties versus, or locations rather, versus classes. Who wins? I think it's fair to say it depends. I think properties definitely win on the balance sheet. Classes definitely win on the P&L. But if I had to pick a winner, you know, if you're willing and able to do all the journal entries, you can make properties work on the P&L. This issue with classes on the balance sheet, you'll never be able to solve for it. You would have to do like a daily entry based on the balances, assuming you remembered, assuming you know everything's been recorded by that point. And let's face it, you're not going to do that. That's going to be ridiculous. So bottom line, if I had to pick one, it would be properties, knowing that there's a lot of assembly required, so to speak, in order to get that to work. But if you can spare the lists to be used redundantly for both, then use both, because then you can get the best of all worlds. I know that not everybody can do that, because you might need classes for something else, or you might need properties for something else. But if you can, the best way to handle this is to use both lists for both purposes for the properties, so that you can get your balance sheet and your P&L to look absolutely perfect. That, my friends, is this edition of Nerd's Guide to the Galaxy on locations versus classes. You know what? You decide who wins. Write that up in the comments wherever you're watching this. Let me know which one you think is better and why.